Hello everyone, welcome to Added Trade. Today we're just going to see the trade review of what happened today, why the market went up and came down, especially Banknifty. Even Nifty did, but we're going to review Banknifty and see how we could have traded today. Today is one of those days where the price action dominated and it was beautiful. I'm going to be explaining everything and how the OI data tricked a lot of people. It even tricked me at one point of time, tricked in the sense it was kind of confusing, but the price action completely dominated. Now this is the today's price action. Before that, even in my Monday analysis video, I had mentioned that, see, these lines that I've marked right on the 15-minute is the next support and resistance. That is, see, we were here, then when we made this high on Monday, it perfectly took resistance over here, right, at this previous resistance and stopped here. So the view, and even on Monday I had mentioned that if this level breaks, the next target is this. If this breaks, we will fill this gap, and this was this entire gap that was there from a long time. And in all my videos I reiterate on how to trade the gaps, right? The moment the gap fills, it's not that we will easily break out. There can be a good reversal, and that's what happened today. So now coming to the trade breakdown of today, I'm just going to get rid of all these markings and this gap and just shift to a 5-minute chart and put on the CPR. So these were our levels that if this breaks, we will trade until here. That was a fixed thing. I've been reiterating the same levels from past couple of videos. Now this is a 5-minute chart in Banknifty. Okay, and I'm just going to turn on the daily CPR. See, the previous day high was here. We got a nice gap up and it was a good green candle breaking R1. So there was, the best entry was here when we retested this R1 and failed to come below this support, this resistance area, right? We failed to come below this resistance area. The price was above it. So this was the best entry, and the exit, the best exit for this call trade was when this gap got filled. But I was only able to log in a bit later on. The first trade, in fact, I took a loss because I entered over here. See, this was a nice bullish candle. Everything was good. The price went up, retested R2 of CPR, came down. It broke out. So I thought, I kind of assumed that with this breakout, we will hit the previous day, the gap. We will fill the gap. This was the gap fill that was there at 34,349. So that was my view and my target. So I did enter over here and waited with this red candle, the next green candle. When this big green candle came, I took my stop loss because I was not happy the way the solid green candle was formed. The solid red candle came, right? I took my stop loss. Then the next entry, there was an entry over here when again this green candle broke R1. But see, when you make a swing high and you come down, the next best entry is when we break this swing high, right, this level. And once we break this, the next target is only about 50 points. This is around 33,313 and this level is about 33,050. So it was only about 40-50 points, so there was no point in entering. So just stayed out for trade and kind of thought that today is a day where I'll be taking that loss, probably like a stop loss, and I'll stop trading for the day. So the moment we hit this gap and we were taking resistance here, later on we kind of had this rising wedge pattern. We have seen this pattern everywhere on YouTube channels, on Google and Instagram, and a lot of the chart patterns in trading, right? Even in my channel there's a video regarding all the chart patterns. If anybody wants, can have a check on that. What was that chart pattern is like this rising wedge, reversal rising wedge, means at the end of a bullish trend. See, we got a nice bullish trend from past few days, right? From almost 3-4 days we had a nice uptrend. At the end of this nice uptrend we had this kind of a rising wedge pattern, and even this count was perfectly fitting in. And then the dip. So this was one thing, the one reversal pattern was there. The other convincing factor was the divergence. The price was continuously making a higher high, but the indicator was making a lower low on 5-minute and even on 15 minutes. Even on 15 minutes there was a beautiful divergence. See, you see the price making a higher high and the indicator was making a lower low. There was a beautiful divergence. So we took a short trade again at over here. when this candle broke down and kind of kept this breakdown area as the stop loss. We came almost retested the stop loss. This was the perfect entry, kind of like a retest of this trend line, but we had entered here. Sorry, we had entered over here, and our targets were, the first target was this, where the green line that I'm marking, where morning we had taken some support. So this was the first target. The second target was R1, and I did, in fact, after getting this green candle, exit, because I kind of, after taking the loss on the first trade, by this move I had recovered my loss and I was in profit, so I exited when this green candle came. Then again, when kind of this previous day high broke, right, this is again a CPR logic. If the previous day high breaks, we might hit the CPR. So again, in this move, just ended up scalping and made some money. See, what is the most important thing is how the price action worked today. I'm just going to remove all the drawings and close the CPR, and once again just tell the logic behind today's trade, which in fact worked beautifully. One is this resistance. Okay, I'm going to mark this in purple. There was this strong resistance, and this was also the gap area that needed to be filled. That is this entire gap portion that I'm referring to. So the price came there, exactly took resistance. On the 15-minute, we had a nice divergence along with this rising wedge chart pattern. Kind of this rising wedge chart pattern, even that broke down. But the one thing that was a bit confusing today was the OI data. Okay, I've taken a couple of screenshots just to explain in the video. I'm bringing up one of the screenshot now. See, this was taken at about 12:01, where the OI data was showing the Bank Nifty to be slightly bullish, because we had put writing until 33,300. This is the change in OI for the day today, intraday, at about in the afternoon, and the OI data for 33,400 and even 500, it was showing that the put writers were coming in. So the OI data was kind of confusing. It was showing a very bullish data, but that bullish data was not backed by the price action. But we ultimately need to depend on the price action, right? That's why we took a strong short position as the price action was indicating it. And see, the end of the day, this is the end of the day, obviously. This is the live data that I'm refreshing. Just see the change, how the OI changed within like matter of couple of hours. See, this is where when the market was going, or when the Bank Nifty was around 33,300, right? This is how the scenario was. But towards the end of the day, see, just only call writers came in, hardly any put writers, and the only put writing that came in is at 33,100, and all the call writers and the put writers that were here have exited. So the market is kind of showing a bearish trend again. So this was the trade review that I just wanted to explain how this trade worked. A lot of people would have made money, and I'll be coming up with my market analysis for tomorrow in the next video. So just stay tuned and watch even that video. And this is our kind of our position that we have taken. So this is the first trade where I took loss, as explained, when this when we broke out of R1, we wanted to go long, right? But that didn't work and took loss here. And the best trade was here when 34,300 PE, and then rest all was scalping. See, when you have this type of a falling market, right, when it's breaking all the support levels and falling, sometimes you just have to enter. Like say when a previous low breaks, just enter, and within 1 or 2 candles or 1 5-minute candle, just book some profit and come out, because the fall will be so good that the option premiums will increase rapidly. So this was the, from here probably until this 5-minute candle was my best trade on the downside. Then all this was just scalping in the end, just enter exit with cost to cost. Cost to cost meaning, now say you enter a put at 250, depending on how much of a lots whoever is trading. Now it is going around 257, 258, 259. Now for some reason it comes back to your level of 250 or say somewhere close to 248, just exit. You can always re-enter because you are already in good profits, right? So this is a way scalping you can do when this type of momentous fall comes. And how we can also have the targets for this is probably using the CPR level. The moment this previous day high broke, that's when I re-entered until CPR and just made some money in the scalping. And though our first trade was a loss trade today, but I think these type of trades is what makes me happy because everything on the technical analysis worked beautifully. And that's it. Thank you.